Charts and options flowing high, stakes are rising, watch them fly. Natural gas, a wild ride, in the market we confide. Commodities, silver, gold, traders' dreams, tales we told. Futures contracts never fold, in profits we behold. Buy low, sell high, money stacks, touch the sky. Market rates, we glide, in trading we reside. Bulls and bears, we ride the tide. Candlesticks can't hide, gas and metal side by side, where fortunes often collide. Leverage margins, risky play, day and night, no delay. Dip and tick every day, watch the numbers sway and sway. Broker screens, they light the night, every tick a gamble right. In this game we found the light, trading life our appetite. Buy low, sell high, money stacks, touch the sky. Market waves, we glide, in trading we reside. Bulls and bears, we ride the tide. Candlesticks can't hide, gas and metal side by side, where fortunes often collide. Bulls and bears, we ride the tide. Candlesticks can't hide, gas and metal side by side, in trading we reside. Bulls and bears, we ride the tide. Candlesticks can't hide, gas and metal side by side, where fortunes often collide. Leverage margins, risky play, day and night, no delay. Dip and tick every day, watch the numbers sway and sway. Broker screens, they light the night, every tick a gamble right. In this game we found the light, trading light our appetite. Charts and options flowing high, stakes are rising, watch them fly. Natural gas, a wild ride, in the market we confide. Commodities, silver, gold, traders' dreams, tales we told.
All right, folks, problem resolved. We had a sound issue there. Sorry about that. It's simply because I had the music on. I'm very apologizing about that, but we're still on time, and I'm glad we're all here. So what I was saying is welcome to Sunday Night Live. It's great to have you all here. We're going to be talking about the way the market's set up in the final week of the year, the sort of week of Christmas, and what normally happens. I've been trading this market for, just let me know you can hear me. Can you hear me, folks? Let me know if you can hear me before I even say one more word. Please type something up in the chat, a Y or a thumbs up or something like that, just to let me know that it's all good. And then we can carry on. I'm so sorry about that, everyone. Okay, fantastic. All right, so we're fine, no problem. And we started on time. So yeah, so I just wanted to say thank you for everyone for being here on this Sunday night. We're going to try and not be as long-winded as normal. So pay attention, get your questions up early. We'll try and finish this off short, sharp, and quick. So thanks for being here on a Sunday night. It's family time, that's for sure. But we all want to know what's going on in the markets in the next few days into the Christmas period, and that's what we're going to talk about. I've got some notes on this page here, which I would like to sort of switch over to and maybe just make my appearance a little smaller and just get me into the corner there, or maybe in here, and we'll go through the notes. So welcome to all of you. I'll just go through a few of the greetings. Welcome to Wave, a new member. Fantastic. Great to have you. Dunwatch, thank you. Brandon, Damajan, everyone's here. Tamaz, Jazz, Emily Trading, Tampaz, Michael, Ole, everyone here. Great, wonderful. Awesome stuff, folks. Let's have a quick look at these notes, and then we'll go straight into the charts. We'll try and do the sharp, short, and quickly, and I'll go straight into the notes here if I can find them. And I just want to make sure that there are no errors. That all looks good. So let's have a look. 21st of December, 2025. I'm going to zoom in a little bit and pull it to the right so that you can see it better on the screen. And I've got to sort of switch back all the time. I think that looks okay. Let's get rid of this comment, and that all looks good. So let's go straight into these notes. So 21st of December, that's today, Sunday. And I'm going to read through these notes. I'll put this PDF up in the private group members area so you can read through it as usual. But so I'm not going to read every word here, but if you'd like to get hold of this, it is in the private group. I will put it up there straight after here, and you can read through. But I'm going to sort of try and pull out the headlines here. So weak in economic data. Last week, we saw poor jobs numbers, but we saw good inflation, pretty good CPI numbers, a little bit tricky on the PPI, but a bit of a rough deal. And then with the NFP, we've got a sort of a data dump, good retail sales, poor jobs. All of that's kind of bad for the economy in a way, but also good in the fact that the Fed might be more encouraged to raise rates with, reduce rates rather, with lower inflation, significantly lower. And we don't know if those numbers were cooked or not. There were some rumors about it, but much, much lower, well under 3%, heading towards 2.5%, heading towards 2%, dare I say, the Fed's target. And so they might be more inclined to cut next year. I think that's the signal the market got. We'll have a look at the rally on Friday across the stock markets, which sort of indicated, prop that story up, or that idea up, as we finish really strong. So a bit of a mixed thing, but generally some weak numbers coming through, which is probably good for the market. They're not that bad that we could see that we're sort of into recession, that there's panic. It's just one of those things where pretty poor numbers, slightly encouraging for the Fed to drop rates. Indices held higher lows. Stock indices held higher lows. Bond yields eased modestly, not much, but a little bit, confirming a slowdown rather than a panic. And the US dollar softened ever so slightly, and then gained a little bit of strength towards the end of the week. So neither here nor there. And the implication of all this is that the markets are pricing in slower growth, but not no growth. In fact, there are projections for next year that we could be well into 3s and 4s for GDP. Whether that's realistic or not, I don't know, but that thought is floating around. Now, the second point is the FOMC and data reinforced the orderly slowdown regime. The Fed didn't surprise or push back, nothing really weird from the Fed, apart from a rate cut, which we all expected. We didn't get 50 points, we got 25, which is fine. Equities sold off a little bit after that, but regained strength at the end of the week. Gold and silver stayed fairly well bid, pretty strong. So we still have this, 2 steps up, 1 step down market structure across the indices. pullbacks remain fairly shallow and corrective. I think the same on natural gas, actually. When I talk about this big pullback on natural gas, is it an impulse move, or is it a pullback or a corrective move? I think a correction. And we'll see the same on the stock markets and some of the other markets too. Notable moves: the Nasdaq and the S&P consolidated just below the highs. We'll look at got to look at Friday's chart. Mega moves, not mega, mega, or you might say MAGA moves on Friday too. So just saying hello to everyone. Welcome to Wave, who's just joined, and Thomas. Nice to see you as well. Great to see you all coming in. There's a lot of folks here for a Sunday night on the week before Christmas. So I really appreciate you being here, everyone. I really, really do. I'm not saying that just to make you feel better. I really appreciate it. Mega cap stocks digesting gains, no impulsive selling. We saw some of those stocks being bid up on Friday, and the VIX actually dropped off quite a lot last week, approaching the levels where we might actually look to buy the VIX, actually down in the 12.5 to 13 level. So I would say the risk appetite is alive, but it's selective, and it's a continuation of current moves rather than structural breaks into massive exponential rises or rallies. And that's generally the idea over the next few weeks. In Christmas, and I've traded many, as I said before, over probably 32 now, maybe 33. But during Christmas and in this week and probably next week, in the New Year's Eve week, normally we see a continuation of current moves, slightly staid and relaxed and timid, but not really pulling back much. So I think we'll see a continuation of the way we ended up the last week or two, and a continuation into the next 2 weeks. Not explosive, not rapid, a melt up, a dribble up, if you wish. We'll have a look at the charts. And I think that might even apply to crypto too. I was rather encouraged by Friday's moves on Bitcoin. I'll tell you why. Number 4, rotation is across assets and not out of assets. And we see that risk is moving, not leaving. So we're seeing, there's still a lot of cash around, a lot of cash going into the market. And we saw the biggest gains, the biggest inflow into ETFs last week that we've seen in a very long time. I'm talking about stock market ETFs, equities. So it appears that cash is flowing in and not out, but it's rotating a little bit across the different sectors. We need to be cognizant of that. We've seen banking and healthcare pick up as a result of the financial moves and the reduced interest rates and so on. Right. For example, there we got it. I've even written it down. Financials and healthcare quietly outperforming. Real estate's lagging. Silver is very strong. We're long on silver, short on gold. Gold is holding at gains. It's not gaining more though. And commodities, oil's range bound. Natural gas, very, very volatile, but failing to trend decisively. Not too sure about that. Maybe I misquoted there or miswrote. And then the dollar, as I said, is neither here nor there. It moved up a bit and then down a bit and then up a bit again. Cross asset signals. Let's look at some of these other ones before we get to the charts. I'll finish off very quickly. Copper, very sort of erratic, but not really collapsing, which is good news. We don't want to see Dr. Copper collapsing. We don't want to see the dollar yen collapsing either. Both of those could forewarn or portend a collapse in the stock markets. We don't want to see that. Bitcoin consolidating consolidating at near highs, recent highs. Altcoins mixed, suggesting maturity rather than mania. We'll come to that. Not so much. We'll wait for Crypto Paul to comment on that later in the week. Let's move along. So the overall takeaway for the week, we'll talk a little bit about natural gas. I did put some notes here. Heavy macro dump last week. It's a bit of a strong way of putting it. Technical structure remains constructive across asset classes. Hi, Ritesh and Manu and Yajat and Emil, everyone coming in. I guess people are wondering what to do on a Sunday night before Christmas. You should be with your families, not listening to me. Anyway, it's okay. Sometimes you've got to get away from your families for a few minutes or hours. Right, so just despite this heavy macro dump that we experienced, the market's recovered beautifully, etc. I want to talk about natural gas. Is this I'm going to read through the notes that are briefly written up. The primary trend, okay, which means the overall picture, the story, the pattern, I think, is still up. And the move from $2.60 to $5.50, I think, was an impulsive move. It was clean. And what we're seeing now is a mean reversion. We're going to look at the charts very shortly. and a structure repair and not a trend break. So I would say, I think generally that natural gas is moving into a higher range. We saw a massive impulse shooting through a little bit excessively through the top of that higher range and then pulling back after the overshoot. We get an overcorrection. All markets do this, particularly natural gas. So overshoot leads to an overcorrection. And I think that's what we have now. It's a classic widowmaker behavior after vertical leg up. What the pullback was from 550 sharply down, fast, emotional, news assisted. Of course, most of these moves need a catalyst. We got a couple of catalysts in terms of weather and storage, but it did not retrace the entire move up. And we stopped in the golden pocket. We'll look at that now. And so we'll talk about this when we get to the charts. That is all the notes, folks. And I want to go through very quickly with you and encourage you to join us on X. Come and follow us on our X channel. And you can see there's a live button up there. In fact, we are streaming on X, and somewhere on here is the X stream that's busy going on. So we're busy streaming now. We're currently on X, on YouTube, on Instagram, on Facebook, across all the social media platforms. And thanks to our back-end team, and particularly Emily Trading, I have to thank you, our very, very capable media manager, who has got us streaming on 4 different platforms simultaneously. Right. The reason I bring that up is because there's a few points on here that I would like you to look at. First of all, Crypto Paul's analyses on Bitcoin and altcoins. He's put some up recently at the end of last week. Have a look at those. And also, please join Paul for his streams this coming week. He will be, I'll talk about the schedule for this week very briefly. There won't be a live stream on Wednesday with me and Paul, but Paul will be doing his videos on crypto, altcoins, Bitcoin, and I think a live stream during next week. So if you're trading Bitcoin, make sure to join this channel, subscribe, and be there for those analyses. So I won't go through those now here on X, but I did want to point out a couple of things. I do put up charts, and so does Paul, every day on X. For example, this one on Bitcoin, when we've seen these liquidity grabs at 9 a.m. or 10 a.m. New York, every 9 a.m. every single day, selling these markets off. It didn't happen on Friday for the first time. So these little things we put up on X, so you can have a look at them, and they're interesting little tidbits. Treasury news, a little bit of stuff on XRP that I put up on there, a few more things, bit of news. So every day there's activity on here. I'd encourage you to go and have a look at that and just follow us on the X channel, because in between videos, I do a lot of stuff up there on X. Right, now let's switch the screen back a little bit to something more attractive. Now I'm going to, must now switch across to the charts, and let's do that. Bear with me. Share screen, window, charts, and I think we're away. Boom. All right, so we got the charts up. Now I'm going to go through all of these charts. Please make sure to put your questions up now. This is not going to be a long session. We might be finished in 20 minutes. So if you've got something urgent that you'd like to talk about, type it up now. I'll answer the first questions first. I might not get to all of them. So that's why I'm saying do it now. Let's go through the charts. Now, I'm going to start with, I'll get to natural gas towards the end, so stay around for that. But I want to cover this in a logical sequence. So I'm not going to start with natural gas and energies. We need to talk about the dollar. And as I said to you, the dollar, and I'm going to really try and not waste too much of your time today, but I'm going to show you the big picture for the dollar. I think we're heading down there. We've spoken about this many times. There's no need to repeat it every single Sunday night live. You can catch up on the previous sessions if you haven't seen some of this stuff. But I think we're going to get down to there, the bottom of this megaphone eventually, and then bounce up back into the sort of parity zone at around about 100. And we're trading under 100 now, and I think we're moving down. Now, if we look at this weekly chart, you can see we've got now one, that was a, not quite a dark cloud cover, not quite, but almost something like it, almost an engulfing candle. So 1, 2, 3, and 4 weeks down. Last week was a bounce from not even sort of in the middle of nowhere, really, back up to the 20-week moving average. But even though it was a white candle, still had a lower low, and a lower high. So that's the weekly chart. And on the daily chart, you'll see that we had a bit of a bit of movement during the week, just down and back up again. So, well, yeah, down a little bit and back up a little bit further, back up into. I think we can get back up into this cluster of moving averages, maybe slightly higher. Maybe we have to get all the way back up to 100. That's parity, where we started selling or selling the dollar against other currencies like the euro and the Aussie when we reached there. Maybe we've got to get back there and form a triple top, or maybe just to these moving averages. But overall, I think the dollar will move gradually down towards the bottom of that megaphone and then eventually bounce out. A weaker dollar should be supportive of risk assets. And of course, that would include stocks, indices, Bitcoin, metals, actually everything, commodities of all sorts as well. So just on the currency front, unfortunately, I'm still stuck in my short dollar yen. Even though the Bank of Japan raised interest rates, it did nothing for the yen whatsoever. And we've broken up through the top of this very meaningless now, I suppose, channel, because it's deformed and lost its shape long ago. I should just remove it. Maybe I'll do that right now on air, so to speak. So there's a swing high there, and there's another one there. We're heading up towards, I think, that red arrow. That was the last time the Bank of Japan intervened. We got the big sell-off, and it's happened, a few times in the last couple of years, particularly in 2024. Not so much during 2025. In fact, all we did was we melted up throughout the entire year, all the way up to where we are now, back at where we were, where the Bank of Japan is likely to make noise about intervention or intervene. So I've got two positions here, and I don't really know what to do with them, to be honest. Let's see what happens at my question marks at that top there. Obviously, if we break above that level where the Bank of Japan intervened, I'll have to hedge these two positions. Not massive positions, but incredibly annoying, because I've been holding them for a long time, and they cost money every night. Now, the other one I'm interested in, and the only one, look at the JIXI, by the way, talking about the indices, the dollar index. This is the Japanese yen index. And in the week when we got the Bank of Japan, the week when we got the Bank of Japan raising rates, you'd expect the Japanese yen to have gained some strength, but it didn't. In fact, she fell down, particularly on Friday, just crashing down. We tried to hold support, and then Friday we just had capitulation. That drove the dollar yen up. So yeah, I don't know. That's an interesting chart, but this is one, considering that I think we might have a weaker dollar in general, this is one that I kind of favor. The Aussie dollar, I was tempted to buy this on Friday on the pullback to the 20. It didn't quite get there, and back to the breakout level of this big sort of falling wedge pattern that the Aussie's been in for a long time. We performed that big spike down. That was actually created by the Liberation Day tariff scenario. The Australian dollar and commodity currencies were affected because of the nature of what they produce in those countries. And there were threats of tariffs being slapped on all sorts of commodities, including coffee and cocoa and copper and soya. Big deal with soya and China, and all of that actually drove the Aussie dollar down in that moment. We've had a lot of consternation about tariffs since then, but the Aussie has maintained its strength and eventually broken out through the trend line. We've pulled back down to the trend line now, and I'd like to get long here for a target of about 0.75 on the Aussie. That could give us about 800 or 900 pips if it gets going, but it's very slow at the moment. It's not really moving. Now, quickly onto stocks. As I said, a massive day on Friday across the board. There's the NASDAQ, S&P, German 30, and Circle. Okay, 3 indices and Circle. I bought Circle the other day. Just checking back to see that everything looks all right. I think you can see me okay. I think everything looks good. We're going to talk about gas and everything. I'll get to the questions. Thank you, Brandon, for your question. Much appreciated. And all the other questions above that, we'll get to them. But I want to give you my sort of monologue, broad-based thing. Now, big moves up. And yeah, that's great. We're long on across the board, long on the NASDAQ, long on the S&P, long on the German 30. I took profit on this, actually. We got a massive profit on the German 30. The last tranche was all the way down here at 23,000. We got out at 24.5 or something, and a big move up on that. So I'm sort of waiting for this to move next. I don't know quite whether this is going to follow the other indices, but we've got a beautiful flat top just waiting for a breakout. And if we do break out of what might now be construed as a bull flag, it's super interesting, because the natural target for this bull flag on the German 30, excuse me, is equivalent to the height of the flag pole leading into the flag. And that means that was a move from 18.2 up into, let's take the bottom of the flag, 23, call it 5,000. So if we move from the bottom of the flag, if we break out through the top, measure from the bottom 23, add 5,000 onto that, we get to 28,000. And that's all the way up here on the German 30. Is that possible? I think it is, actually. And I might be looking to buy the breakout pullback on the German 30. But the other ones moved up beautifully. We're long on these and long on some of the names: MSTR, Tesla, Coin, NVIDIA, and now Circle we added last week. And these two positions are now in profit. This is a bit of a gamble because it's a new name. And there was a lot of hype about it, moving up from $60 to 280 and then collapsing back down to 60. So a bit of a meme play, really, almost, in a way. But I think we can hold here. We've pulled back to the initial product offering level. I think that's a good place to at least have a go. So look at the way we closed on Friday on the NASDAQ. I'll just use this as an example. Shaven head, shaven bottom candle. Not quite shaven at the bottom, a little tiny wick there, but a shaven head top. Also closing above the 50 and the 20 period moving averages and above this sort of consolidation breakout level here at about 25.2. And we've held and closed above there with a massive white shaven head candle. Shaven head simply means when we've got no wicks at the top. Shaven bottom, no wicks at the bottom. It's almost a shaven top and bottom, which is incredibly bullish on any candle. You don't see it a lot. We saw it over there, for example, on the left. We saw it over there. That one didn't, okay, it wasn't quite shaven, nor was that. But that was more of a shaven top, and it moved up from there. Now we've got another one over here. Same on the S&P, same on the German 30, although that spiked down a little bit at the end of the day. But definitely a shaven head on the S&P too. So I'm bullish on stocks moving into next week. As I said, next week, and there will be a couple of holidays over the next 2 weeks. There'll be Christmas Day, Boxing Day, New Year's Eve or day. I don't know. I think it's Eve or day. I'm not sure if it's 2 days, both off. I think it's just one. So 3 holidays. There won't be much trading, if any, on most markets, maybe the Forex markets. But all the other days, we should just see, in my experience, I'm not guaranteeing this, is not a prediction. It's not an encouragement to trade these ideas at all. In fact, nothing I say is an encouragement to trade anything. This is what I'm doing. This is what I think, and I'm often wrong. So, follow me at your own peril. And I've lost my train of thought. Yeah, so normally what we'll see is just a continuation. We're not going to see I don't think 2 or 3% rallies in the S&P and the NASDAQ, but we might see 0.5% or 1/3% or 1%, and then 0.5% the next day, and then a pullback of 1% or 0.5%, and then a gain of 1%. So it's going to be this very dribbly sort of move up, and it's normally in the continuation of the direction that was set before these next 2 weeks, and definitely on the NASDAQ, S&P, etc. That's all up. I'm not going to talk about Bitcoin, apart from saying, and I'm going to leave this to Crypto Paul next week. He's got some videos and the live stream. Please join him there. But just to say, we had over the last week, literally this last week, at 9 o'clock every single morning, we had Bitcoin selling off and rallying up until 9 o'clock during the Asian session and the European and London session, and then selling off at 9 a.m. New York every single day at precisely the same time. It's obviously scheduled, systematic, routine, and arguably demented selling or malicious, you might say. But we didn't get that on Friday, though. Friday, we actually didn't move down. We rallied up and we didn't move down. All the other days, we rallied up, collapsed at 9 o'clock, rallied up, collapsed at 9 o'clock, rallied up, collapsed at 9 o'clock. Been going on for maybe more than a week, actually, probably 2 weeks or 3 weeks. On Friday, we rallied up and did not collapse. Now, going back to the day chart, it all looks quite good, but nothing matters unless we get through this level that we're currently butting up underneath at the moment at about, I don't know, 90. We've got to get it back into this channel. Let's zoom in. We've got to get back in here above the 20, ideally above the 50 in the channel center line. But let's just start here. If we can get back in there, up above this level at about 90, and close above there, and maybe for 2 days or an entire week, that would maybe be more positive in crypto. If we fall through here, we may well move down to make a double bottom at 81,000. And if we fall down through there, we may have to go to 70s or even 60s. Some are saying 50s. I don't think that's the most likely case, but I'm allowing for it. And therefore, I'll hedge every single bit of speculative Bitcoin that I've got below this level that we formed during last week's low, basically. If we look at this on the weekly chart, I'm going to finish with this. Crypto has now done 1, 2, 3, 4, 5 weekly wick lows and bounced out on every occasion. And notice where the 100-period moving average is over there on the weekly chart. So that looks good. And then finally, I'm just going to finish off with this. This green pattern here that you see, and I pointed this out before, it's still up on X. You can go and check it there in more detail, is what happened in 2020. We had a potential bear flag. We broke down through the bottom of it. We broke back up again, held the level that we're currently trading at in terms of not the number, but the fractal that I've drawn. I've copied it. This is the exact move from 2020 in green, which I copied across here. And we held the level and eventually bounced out back into and got moving. After this, it moved up by about 2 or 3x. Okay, 2 or 3x. We're at 100,000 now, 90,000. That takes us to 270. I'm not saying that's going to happen at all, but that's what happened in 2020. And we have a very, very similar pattern. That's all I want to say on Bitcoin. I'm still remaining bullish, but I will hedge the whole lot. I've got a 20% hedge on across the board, a short trade, in other words, on Bitcoin, Ethereum, XRP, and Solana. And I need to remove those if this market keeps moving up. If the market moves down from here, and it could well do, it's Sunday night. We've seen manipulation on Sunday nights before, which is not very good, not very exciting. We've seen it. We've seen it twice on a Sunday. We've seen it on Fridays. We see it when the market's thin, and the market will probably, with the market, I mean people in the market will probably have that in mind. Going back to this chart, it's Sunday night. In about 3 hours' time, there'll be a flood of activity, and there may be some nefarious activity. Just be careful. Watch those lows. Last week lows, I think, are the line in the sand for me. If we fall down through there, I'm out. Not on my Bitcoin holdings, but on my speculative Bitcoin, which I'm holding on trading accounts and on warm, soft wallets. Some of it on leverage. Not much, but a little bit is on leverage. Some Bitcoin and Ethereum. That's all. Now, going across to metals. Very quickly, I'm still long on silver. We got long at $50. We've been in and out variously, but we keep on adding the position back on, taking a little bit of profit, getting out, buying slightly lower. So we're basically in at 50 and we're still in at 67. Fantastic trade. What can I say? I'm very pleased with that one. Incredibly pleased. But at the same time, we're short on gold, and we have been short on gold many times, particularly over here. Look how many shorting opportunities there were on gold. And at the same time, we were buying silver, and we made profit on the shorts on gold. We made profits on the longs on silver simultaneously, as the gold silver ratio has been dropping and silver has gained ground against gold. Let's zoom into these charts very quickly. Have a quick look. Yeah, I'm still short. Although I hedged this on Friday, I remove the hedge as soon as I can. I think we're going to break down through here at some point. It's now looking precarious. This purple trend line is being dribbled upon, if you wish. It's not bouncing out of the trend line. It's flopping onto it and not looking strong. And at any moment, a little trigger of an algo or a zealous seller or a big order or a futures or an options contract that expires, something could trigger a quick move down through the 20, and that's the green line here, and the trend line, and set off a flurry of stop losses, hedges, and reversals, and drive this very rapidly down to the next trend line at about 3,800. And I hazard a guess, we could get as low as 3,500 to the breakout triangle. That remains my long-term target down at 3.5. But if we start moving higher and higher, I'll abandon that and look for higher targets for shorts. At the moment, it's this red trend line and possibly down to the green trend line that's coming up underneath here. There's the 200, 150, and 20. We're still above all the moving averages, not bearish yet. And the only reason I'm able to hold this short now hedged, or have been able to hold it, is because I've been long on silver simultaneously. And the gains on silver have been my hedge against the potential for gold to move up against my short position. I have a hedge position on copper. I'm trying to get long on copper. Every day I look at copper and I want to get long. I haven't had the opportunity. Right now, maybe it's a good thing. We spiked up into the 786 fib right there, the last chance Fibonacci right there. It's always a test for the markets. If we get to the last chance fib, it may reject or it may power on through. And very often, if it is going to turn around, it will do so here. I'm watching this very carefully. We had a big spike up into that 786 almost perfectly above that last recent swing swing high. There's the all-time across the left, but above that high, but suddenly rejected from the 78.6 and this consolidation zone to the left, where we tried to figure out where the market was going after the tariff situation. That was a tariff rally, tariff sell-off. We got all of these moves up and down. We've been trading copper fantastically this year. So yeah, maybe I need to get short on copper now. I don't know. We don't want to see copper crashing and collapsing. People are saying, why are you not long on platinum? I don't really trade the platinum group metals or palladium, platinum, any of that stuff. But yeah, I think this might come down soon. It's a little bit overdone. And I've seen the South African rand. A lot of platinum comes from South Africa, where I live. And the rand has strengthened dramatically, too much. And I did see the rand just turning around a little bit on Friday. We'll look at that chart. And maybe platinum needs, it's down here, needs to top out. Now, let's look at natural gas. Let's not waste too much energy on other stuff and get to natural gas and have got no energy left and find out that I just flopped through it. This is the 4-hour chart on natural gas. Now, just to summarize, we were short from the red arrows. We hedged over there. We started buying more there and there. We've had lots of positions in this week, some long, some short. Currently, we're long. I'm long from these 3 green arrows, and we have a hedge position at the trend line there. We took profit on some of these shorts. We got a good profit on those. We should have held on. I didn't think we were going to get through the trend line, and then I certainly didn't think we were going to get through the 200, but we did both. And if we look at this on the day chart, before we do that, so I bought at the bottom, I bought at the bottom. We've got a double dip here, maybe a double bottom, and we've fractionally moved above the 20-period moving average here on the 4-hour chart, closing strong on Friday, which I like. We closed strong on the stock markets. We closed strong on Bitcoin. We closed strong on metals, and we closed strong on natural gas. And dare I say, we closed relatively strong on WTI oil too. So everything getting a bit of a bid. And perhaps I think with the everything bid, it happens occasionally, and often that will continue. And I hope that this everything bid, which continued right up until the final moment, the closing bell on Friday, will continue into this coming week, this coming Christmas week, which is light of volume, but steady in structure, in my experience. Low volume, but without the whipsaw and snappiness that you expect, but more steady and consistent moves. I think we're going to get continuations, including natural gas. So having said all that, let's look at the daily chart and see where we actually got back down to on this very dramatic pullback. I said to you earlier in this video, impulse moves that go too far and too quickly. This one didn't actually. I noted last week, the week before, if you remember, that I said when we got to the underside of this line, we should be looking to short. And that's what we did. And that line has held for multiple years now, randomly. I don't know why. It's an old channel which started off here in 2023. You will have remembered if you were trading this with me back then. It's now going to be 3 years ago, almost 3 years ago. And I just left that channel in. And the next time we came up to it over there, we tested it twice, once, twice, 3 times. We got into it on the 3rd occasion and still rejected. On this occasion, we got almost just about touched it and rejected. So an important level or line, a weird trend line because it's sloping up and it's, the price is not attached to it. Anyway, look where we came down to. We dropped down through the 50%. We came down to this horizontal line here at 384. Remember, 375 is a very important level for natural gas. That's exactly where the 618 fib is at 372. We've also got a little gap here, and the price might have to get down into this zone and level at between 350, 375 if we're going to move lower. There's also a cluster of the 100 and the 100 period moving averages right here at that black horizontal line, which I have as a previous support and resistance line. So we've got loads of support beneath us. We haven't even got to the 61.8% Fibonacci retracement yet. We've got through the 50 a little bit, didn't get below the 50 to the 618, and bounced up sort of halfway in between. So it's not the best place for this to turn around. It's not really a support level which I have mapped out. However, it did find support there, and I think the everything rally that we saw across the board and the general drop-off in the dollar, the interest rate cut by the Fed, the weak jobs number and the strong GDP projections and sales projections are all pretty good for natural gas, bouncing out with extra demand expected through industrial consumption, let alone heating as we move into the colder season in the Northern Hemisphere. So there's a chance that we could bounce out of here. Now, it's not a bad structure or pattern either. Going back to the 4-hour chart, you can see we've got quite good reversal candles, a double bottom. We've broken above the 20-period moving average. We've got 2 good long positions on from the bottom. Yes, we're carrying a loss from there and a hedge from over there. And it's the weekend. I don't know what the weather models are going to look like in a couple of hours when we'll look at them. We'll look in the private group. Thanks for TC and all the others, and Lucky in the private group who help us with all that data. We'll have a look at that. But I have a feeling that we're going to gap up. We're probably going to reach up to about $4, 15, 20, and even we could get up to like 25 above this resistance and the 50 period. Natural gas often, if it does have a gap, a weekend gap, not a contract roll gap, but a weekend gap, it will often take the opportunity to clear key and important levels. We've seen it before when we saw gaps over and under the 375 level, another key level on the chart. But what I've said basically is I think this is an impulse move driven by demand, not just short-term demand, but general demand, embedded demand, AI chip Bitcoin demand, which is not going to go away. More electricity needed, basically. And that this was an impulse move. This is a correction which only got halfway back, a little bit further than halfway, didn't even get to the 618, bounced out prematurely, still a chance of a test. There's a gap there, fair value gap right here, just below us. Still a chance of a test of that double bottom there at 350, 55, if we have to, or that line in the middle, which is in the middle of that fair value gap. So keep all of that in mind. It's looking good, but there is a danger that we have to get to 350, 355, and the original breakout level, basically, the start of this move. If you look at this chart going back a little further, you can see that's the breakout level right there at 356. And as you know, when we get a breakout on any chart, any instrument, any time frame, very often we have to come back to kiss it goodbye, say adios, $3.55, see you next time. There's a funny saying we used to say as kids, see ya, don't want to be here. Yeah, that's it. I like that one. Maybe it's American. I think my kids used to say it at school. So see ya, don't want to be here. And I think that's maybe what it's trying to say, but it may be premature, and we may have to kiss the actual breakout level at 355 goodbye. If we break down through that level, it's a very clear level now. It's very obvious. It's a double bottom. And so we know where the line in the sand is at the bottom, and we know where the target is at the top. The target's back up to the order block, the underside of that short-term trend line, and there's a little gap here where I've drawn that red arrow. You can't see it on this chart, but you can see it on the futures chart. This is the futures, but it's at FXCM. But you can see it on the Henry Hub, and that's over here. This is straight from the Henry Hub, the NGAS F, and there's that little gap at the top. It's a weekend gap, and it has not been filled. Now, going back to the chart, I'm trading exactly the same instrument, the front month futures at FXCM. I'm going to go back to Black Bull next week. But here on the front month futures, that is shown as a candle and not a gap. But it's there, and it may need to be filled, and maybe this arrow has to go all the way back to the top of that gap. In other words, back to where we came from when we started to sell off. So that's natural gas, folks. I hope that was useful. I will get to the questions shortly. I just want to quickly finish off with some of the things. Oil, yeah, I'm still short on oil. In mind, I think we can get down to, I don't want to recover it too much today because we don't have a lot of time, but I think we can get down to 55 and then 50 and then 48 and then bounce all the way back up to the 60s and 70s on oil. And then softs and grains, not a lot to say here. I'm a fresh long on wheat, bouncing out of the trend line, I hope. This is the falling wedge that we've been trading off a long time. We got long at the triple bottom there on wheat. We got out at the flat top there, and we now bought again, or I bought again back at the breakout level. Exactly what I was saying on natural gas. There's the breakout, pull back, kiss goodbye, see ya, don't want to be here, and off you go. And I'm hoping that natural gas will do the same. But Maybe we don't even have to get as low as that $3.55 level. Maybe not. Hopefully not. So that's wheat, a nice breakout there, and we've now bought the pullback. I'm long on sugar, had a good bid. Everything bid up on Friday. Sugar up, wheat up a little bit. Cotton, we're long on cotton. Cotton up a bit. And coffee, fair game. I took profit at the trend line, at the red line here, and coffee just fell straight through there down to here. Now, coffee might bounce back up to the center line of this channel, allow for that. It's probably going to try and bounce here at the channel bottom and then move its way, find its way back up maybe to the point of control at 375, something like that, channel center line, and then continue on down. I'm not going to be selling more coffee. We've been selling this a lot, all the way from the, at every high, all the time, we've been looking to sell coffee. At this level, yeah, I don't want to sell it at the channel bottom, but I wouldn't mind getting back in on a bounce back up to the channel center line. That's coffee. And then, as I said, TLT moved up quite nicely during the week, gapped down on Friday. Treasuries moved up a little bit, but look at the VIX, folks. This is interesting. Bitcoin dominance moved up quite rapidly, dropping back down, which is good for the altcoins, and Bitcoin gold barely holding on. But this is interesting. VIX, if you're interested in trading the VIX, which I only do about twice a year, that's my sort of strategy on the VIX. We've gone past time, actually, meant to be before the end of the year. But I think the VIX needs to get into the green block before I, generally, whenever it gets into the green block, I like to buy the VIX. As you can see, my last tranche is 1, 2, and I was looking for that, just 2 in the last year or so. And I was looking for another one, probably in January, February, March, depending on how next year goes, whether you see the stock market's rallying or not, I don't know. But wait for the green zone and then a bounce out of there. And still, SPX, bears not allowed. Until the VIX gets in there and bounces out, I don't think we're going to see these stock markets falling off. Right, that's it all, folks. I'm going to go back to the Bitcoin charts. Let's see what's going on. Not a lot. Hedged 20% across the board on Bitcoin, Ethereum, XRP, and Sol. As I said, I'll try and remove those hedges if we bounce out, but if we don't, I'll be adding another 80% of those hedges and basically hedging the entire lot. I'm going to get to some of the questions now, folks. There are a lot, so bear with me if I don't get to yours. Mike's on mute. Yeah, thanks, Chris. Yeah, that was almost a terrible disaster. Terrible disaster. All right. Sunday, yeah, well, thank you, Jazz. Appreciate it. Thank you. Well done for making it here on Sunday night. Don't expect everyone to be here all the time. Greetings, Ole. Tomas from Warsaw. Wonderful. Someone from Warsaw. Audio is not working. Yeah, we got all that sorted out. Sounds good. Thank you so much, Jazz. All right, good. New member. Well done. Wave, welcome to the crew here. Expect from Hong Kong and the Jap. I don't trade those, Damajan, I'm afraid. I could give you some thoughts on that, but there's no time now. And quite frankly, anything I say on those will be worthless because I don't trade them enough to understand the flow, the rhythm, the nature, the technicals. Where do they pull back to? Where, what sort of volatility they have? Loads of things. I like to get to know the instruments that I'm trading quite intimately. Hi, Vishesh, the gas giant. Damajan, trading Forex before Christmas. Yeah, Forex is fine, Damajan. Forex pairs are good. Like I say, I think I'd like to buy the Aussie dollar going back here. I think an Aussie long would be good, maybe a Euro long. I think generally short the dollar, not a lot. We're not looking for 300 pips a day, maybe, like 50 to 75 pips a day. So if we do get long on the Aussie, we might move, 50, 75 pips a day up. The Aussie moves slowly as it is, by as in normal pace. That's very slow, but generally, yeah. So there's not a lot going on. I mean, there's not a lot on offer really. I think basically I would be looking to sell the dollar against the euro or the Aussie if we get a chance. If the euro pulls back, for example, to its 20 period and 50 period confluence here, and 100, 3 moving averages on top of each other. There's the 200. There's a double bottom. Somewhere down into this zone could be good to buy the euro. It's moving down a little bit now. Friday it dropped a bit. So maybe we can get a dip down into here, probably about halfway down into the move. And the way I do it is just put a fib on from the bottom to the top and look for halfway back. And that's around about here. There's halfway, there's 618. So in that zone there would be good for the euro to get long. Those are the only 2 plays that I'd really be interested in. to be honest. Not much else on the others. So yeah. So that's that. Good evening, Vishesh, the gas giant again. Hang on, am I scrolling the wrong way now? Emil and Yayat, Manu, and Ritesh. I'm doing great, thanks, Ritesh. How are you doing? Hello, Chris. Tesla target for this week. Let's look at Tesla. Thank you, Emil. Yeah, I got long on Tesla again. Just got long on Tesla. So we've been long on Tesla basically since this triple bottom over here. We got long there, we got long there, and I got long again on maybe prematurely actually. So don't do as I do, or don't do as I do, or do it. Just don't do. It's probably premature, but maybe not. I just thought we could front run the breakout here. It didn't break out on Friday, even though the rest of the markets did. So Tesla was a laggard, but it did recover quite well. It dropped off pretty sharply on Friday and recovered quite well towards the afternoon. So target for Tesla, first thing is the top Bollinger Band, but I don't really have upside targets. I mean, let's look at this on a weekly chart. What are we aiming for? It's a thumb suck, isn't it? Where are we going on Tesla? I don't know. We could take this as a, take the move. Maybe this is a triangle. Maybe you could say, okay, this is, you got to sort of manufacture your own thoughts on this. But what I would say is, let me try and draw this for you very quickly. Where are the triangles, damn it? I can never find what I'm looking for on this thing here. Triangles down here. So maybe you say, well, this is a triangle, like something like that, something like an ascending triangle, something like that, and a breakout through the top. It's not quite right, but something like that, and a breakout through the top of an ascending triangle. And I haven't drawn it correctly, but you know what I mean. The breakout through the top of an ascending triangle should take us to the target, to the I don't know. It's obtuse, acute. I don't know. I can't remember my high school mathematics, but that line, the hypotenuse, is it? Whatever. That line, the right angle of the hypotenuse of the triangle, that particular line there is the target on a breakout from an ascending triangle. So whatever that is, that's $50, call it $60 up to 400. We could go, could go $1,000. We could double, we could 2x Tesla quite easily, not overnight or instantly, but that's the sort of thing that you'd be looking for targets. I have no clue. We could put Fibonacci projections in there. I can do all sorts of things, but they're all just pulled right out of where. It's just really a thumb suck. So, when the market turns around, when the price action shows us that we've probably reached a top, that would be a good place to hedge or take profit or take some size off, something like that. My family too, Vishesh, you're quite right. You're quite right. Thank you very much for recognizing that. I appreciate that. Natural gas double bottom. We spoke about nat gas. James. Hello, James. Hope you're doing well. I'm short in gold. Just need where it's going. Yeah, I'm short on gold too. As I said, I think I've given you the targets for my gold prices. If you weren't here on time, rewind the video when we're finished, or you can rewind it now. Price targets for NVIDIA we talked about. I don't know. Opinion on natural gas, Maygas. I don't know. I haven't looked at the Maygas contract. But I think the double bottom, we spoke about natural gas in some detail. Hello, Roland. Happy Sunday to you too. Happy Christmas to everyone, by the way. If you're a Christian or a nominal Christian or live in a Christian country where it is celebrated, happy Christmas. Merry Christmas. Have a wonderful holiday. And if you celebrate the reason for Christmas, good on you. I don't, but good on you. Hello, Al. Noah, just stumbled on your page. I must say, while I don't want to join the private community, I respect and appreciate your opinions. You seem genuine in a sea of influencers. Yeah, thank you, Noah. I appreciate that, mate. I'm not an influencer. I hate that term. I'm definitely not an influencer. I'm a trader, and I try and share my ideas with people. I'm not an influencer. I could be. Maybe I should be an influencer. There's a lot of money to be made by being an influencer, but I make my money from trading, so I don't need to do that. Appreciate your opinions. Nat gas, no worries, Brandon. Hope you come right there, mate. I hope you're doing good. Soya looks great. Record harvest expected in Brazil. Argentina, a little. Yeah, so soya is looking really good, the short side, actually. Target for natural gas, we spoke about. Omcar. Circle. Circle. What is metal yellow first red? I'm not sure, Al. But I think you're giving me encouragement on my circle trade. Good day, Thomas. I can't speak Polish, unfortunately, and I don't have time to translate. No problem. I think that's what you meant. Thanks for the commentary. Thanks for the commentary. No problem, Thomas. I think you I think you typed in Polish by mistake, thinking that you were typing in English. Expecting natural gas to fill the gap from October. Yeah, I don't know, MT. Maybe, maybe not. We've got a gap above us now as well. That's got to be filled. So which one will be filled first? I don't know. There's a gap at $5 and something. Looking fly. Thanks, TC. Santa Claus rally. Yeah, I think we're going to see us. I think we've got it. We've got it. I think it's coming. Approaching the contract expiry. Carry the same longs into the next contract. No, I will get out of my longs, Vishesh, and switch over straight into the continuous ETF at Pepperstone for the rollover week. So wherever we are, I have to get out of my position because it gets rolled over and closed. I'd rather do that myself. So I will be closing myself, and I'll get involved in the ETFs on natural gas. Yeah, that's what I'm talking about. Short coffee, long cocoa. What do I think of cocoa? Well, let's have a look. Haristo. Cocoa. We did talk about cocoa in last week's stream. I don't want to be short on cocoa right now, but I would like to get short on cocoa at the channel top there. If you're long on cocoa, it's not a bad idea, actually. We might get as high as 8,400, maybe slightly less than that, actually, because as we move along, this channel's getting lower. So let's just move this something like that. So probably something like, close to 8,000 to the upside on cocoa. And then from there, if we get the right sorts of signals and nods and winks from the market, we might get short on cocoa from that level. So your question is, you're short on coffee, long on cocoa. I think that's a good trade. Good on you. Yeah, not bad. MSTR. Yeah, Manu, MSTR. I'm long on MSTR. Looking for this to bounce out. It's been weak because of Bitcoin. I think it's one of my favorite plays, actually. It's the one that's most reviled and the one that's most sold off. Everyone's just not really. Why is that big gap on there? Don't know what's going on. Let's get that. Let's try MSTR on the NASDAQ. M, not N. MSTR, NASDAQ. Let's have a look. Why is that big missing bit there? I don't know. Yeah, so this is the one we've been trading. We actually got short, but our first trade on my very first trade ever on MSTR was short, right over here. We were long on Bitcoin at the same time, and I shorted this as a hedge against the long Bitcoin that I was holding. It worked out incredibly well. We took profit over there. We bought some more. We've been selling this. We had been selling a little bit here and there, but we started buying around about this triple bottom and the Bollinger Band, and we're quite well out of the money on this trade. But just little bits. And we put another tranche on here. This is the daily chart. Another tranche on just at the lows here. Now I'm using the wrong chart because I've switched across to the MSTR chart. So I'm not going to talk about my positions, but just to say I'm long with a decent chunk of size on this, and not excessive size, not oversized, but a good chunk, and out of the money. I think this is the day chart. I think we're going to try and hold here. I like that spike low. We did get along that, basically where we wanted to get long. We got long on the retest of that more recently than that bounce. But yeah, let's give it a chance. I didn't want us to break down through that purple line, which goes all the way back there. And I am allowing for this. We're going to have to hedge this if it moves down further, of course. I'm allowing for it to get down to the next purple line. And it doesn't look very dissimilar to Bitcoin, actually. If you look at where Bitcoin is, there's a very real chance that Bitcoin could get down to 70s, 60s, or even 50s. And if that happens, MSTR will move down with it, down to probably $100. And that could cause all sorts of problems across the board in the crypto sphere. So we really don't want to see that happen. And let's see if we can bounce out of here and hold roughly this top purple line. We didn't quite get to the green line in the center, and certainly not to the purple line at the bottom, all the way down at $100. So that's my thinking on MSTR. It's worth giving it a go and seeing if we can bounce out of here. In order for that to happen, Bitcoin has to do some stuff as well. Merry Christmas, Tomas. It's a pleasure, Com Rasan. Really appreciate you being here on a Sunday night. Very, very appreciated. Natural gas potentially bouncing off previous downtrend line on the daily. Yeah, we can't. I'm not going to add more. No, certainly not. I don't add on precarious positions. Dead sailor, dead sailor bounce. I like that. A dead sailor bounce. Funny. All right, folks. It's been great having everyone here. It really has. I'm going to give away a few memberships quickly. I think I've got a few to give away, and I think I can give away 5 free memberships. So here they come. They're on their way. You're going to get them. They're allocated to people by YouTube, not by me. So if you got one, good on you. It was given to you by me, but allocated automatically by YouTube. I don't control it. So welcome to new members. James, Salze, Al Canada, we were just chatting, Nachos Koradum, and Ruchi and Andrea. Welcome to all of you. And folks, for those of you who just got those free memberships of this YouTube channel, when your membership expires in 1 month, it's a month's membership, just renew it. It's $1 or $2 or $3. I can't remember precisely now, but you can remain a member. And if you do that, you'll get all of our midweek videos, our members videos, and get access to special content that you don't get if you're not a member. So welcome to the 5 of you. Stay on when it expires in 30 days' time. And I'm just going to quickly look at my sticky note for any final comments. Yeah, I was just making a big deal about welcome to Sunday Night Live, now streaming on YouTube, X, Facebook, and Instagram. There you go, folks. Have a great week ahead. Those in the private group, I'll catch you later when the natural gas markets open. We'll have a look at that together, and we'll have a look at the crypto markets and stuff like that as well. So I'll see you around in the private group. If you're not a private group member, there are links below. It's not expensive. You can get to see every single trade that I take and every single trade and analysis that Crypto Paul makes on the Bitcoin and altcoins. It's well worth it. And there are lots of us in there. It's a great community. And you'll get to know me a little bit better. So take care, everyone. Speak to you soon. It's a pleasure. Marcin and MT. Thank you, Damajan. Take care, everyone.